Hello, today let us look at drawings, and drawings refer to withdrawals made by the owner from the business for personal use. And this is usually a common practice in sole proprietorship, where we have now a sole trader. Okay, and these withdrawals can be in the form of either taking cash or bank withdrawals, that is taking cash from the business for personal use, or taking goods from the business, that is from the purchases or the inventory for personal use, or personal expenses paid by the business, or also taking business assets for use, for personal use. Okay, note that drawings, they reduce capital. They are not an expense. They just reduce the owner's equity. They are not considered an expense because they are not incurred in the line of the business operations. So we do not consider them an expense. We just consider that they reduce the owner's equity. Okay, so let us look at an example. We see how do we record the journal entries when we have drawings. So we have KM Traders, which is owned by Juliet, and during the month of March 2026, these are the transactions that occurred. And the first one is Juliet withdrew Kenyan shillings 10,000 cash for personal use. So how do we record this? Okay, so there is cash account involved, and we are told she withdrew. So definitely we need to reduce cash account, and to do that we credit. So we credit 10,000. And to record these, we need to recognize an increase to the drawings account, and to recognize an increase to the drawings account, we debit that account. Okay, so those are the journal entries we pass for the first transaction. Now let us look at the second transaction. She took goods worth Kenyan shillings 5,000 from the business. Okay, so she took goods. So this is the inventory of the business, or rather purchases. So we need to notice a decrease in the purchases account. So to decrease a purchase account, which is rather an inventory account, and for so an asset account, you credit that account. Okay, and to recognize an increase to the drawings account, you debit drawings account. Okay, now let us look at the third transaction. Kenyan shillings 3,000 charged as office expense was actually Juliet's home cleaning cost. Okay, so we had office expense charged to the business already and paid. Okay, that are not business expenses. Basically it is a cleaning expense because it was for cleaning Juliet's home. So we recognize an amount higher with an addition of 3,000, which was a personal expense. So we need to decrease that. So we need to credit 3,000 and recognize this in the drawing account. So drawings, we debit 3,000. Then let us look at the fourth transaction, where we have she took a motorbike valued at 50,000 from the business. Okay, so this is a PPE account, basically specific to the motor vehicle account. Okay, and we need to recognize a decrease to that account, and by doing so we credit that account. Okay, and then we debit that drawings account to recognize that increase. Okay, so one thing you need to note is when you want to increase a drawings account, you debit. When you want to reduce it, you credit. Okay,